Namaskar, Jai Hind, Vande Mataram. Bharat is celebrating its 78th Independence Day today. So, a day, a national festival, a day which fills you with pride about all the achievements which my country has done over the past 78 years in the recent past. If we were to talk about the post independence history, but a country with traditions of and a civilization, the oldest civilizations in the world, and we have a legacy of 5,000 years, and I can go on and on and on about it. But this channel is more about finance and economics, so yeah, I will stick to that. But at the same time, today is the day we look back at our past, we learn from the mistakes, we cherish our history. um, uh, 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 78th Independence Day. So, yeah, many congratulations to each one of you. And our forefathers, they have done what they had to do. They kept the Indian tricolor fluttering high in all fields, whether it's economics, whether it's on the border, whether it's space, whether it's medicine. And now it is upon us, the current generation, and the future generations. So, Mm, and this one picture captures wonderfully. We have our national emblem, we have Bharat Mata, we have India's flags, the lion, and there is this dragon over here. There is this dragon over here who's the Chinese threat. This is after the 62 war. This drawing was made, but even in the contemporary scenario, we are in a very volatile neighborhood. In fact, the whole world is volatile, if you will. There are war going on, the Middle East, the Europe, the Russia, America getting involved in Middle East. So globally the setup is kind of unstable. And come to India, we are surrounded by a failed nuclear state, Pakistan, a belligerent China, where people are losing faith. Global economy is slowly shifting, manufacturing shifting out of China, going into Vietnam, some bit coming into India. uh, iPhones are now manufactured and shipped out of India. Bangladesh, a problem there everyone knows and is talking about. So we are in a kind of a flux kind of a situation. Even within India there are attempts being made to, because the only stable spot today in the globe is India. And the Olympics have been marred by wokeism. Uh, so if there is one flag bearer, then that is India today, and there are serious attempts being made to destabilize this economy, the country. In fact, one of my videos on the Hindenburg, a small reel, 1 minute, on the Hindenburg attempt to tarnish SEBI's image, went viral in the social media by WhatsApp and others. And uh, thankfully, the next day, the Indian retail investor did not panic, and we did not. There were some corrections in the Adani Group stocks, but the damage was restricted to that. And I think by the end of the day, they also recovered. But the market as a whole that day behaved in an extremely mature fashion. And that's the key takeaway for the Indian retail investor. She has matured. We won't allow these kind of strong arm tactics or these kind of attempts to undermine our institutions. Or, I mean, war need not always be fought on the border with bullets and bombs. That is there, but this war on the economy, on the people. I mean, if the market crashes and someone makes some money because they are short, then fine, that's one part. And the market can fall. I mean, for a variety of global reasons, the market can fall. The markets, they will keep rising and falling. That's one part. But that's the orderly movement of the markets. Here there was an attempt to deliberately strike the market, and I mean, to instill fear amongst the people, the investors, and the people who are in the market infrastructure, those who are working. So that cannot be allowed. That fear cannot be allowed to enter our hearts. And that's what the entire market mechanism showed the next day. All the employees, all the investors, everyone who's involved directly, indirectly with our markets, they need to be congratulated for that day that they stood up, and our markets did not succumb to that random external pressure. So that's the big message. Otherwise, there are people, there are independent financial advisors all across the country. They are selling mutual funds. Their income comes from the brokerage, and these are not all are multimillionaires. And there are small guys, there are youngsters who are creating their own businesses. They have a few clients, they give them their research reports, research analysts, or small people in far flung areas. And if the market crashes for no weakness in the Indian economy, understand, there was nothing wrong in the Indian economy. In fact, on the 1st of January, I had come out with this idea, India Outlook 2024. Optimistic is an understatement. Optimistic is an understatement. So there were signs amply visible that Indian economy is on a strong footing. We are 8 months into 2024, and still we are at the same position that we are a strong economy. Nothing is wrong with us, and therefore these attempts by global people to hit the economy. So we need to be very alert and aware about this. Our economy is in fine shape, and we are chugging along nicely. And that's the reason why there will be attempts and attacks on the economy. See, India, I mean, historically, because it is Independence Day, I can't but feel nostalgic and relate to what happened with our country historically. Now, India has always been under attack. The Mughals invaded, the French invaded, the English invaded. Why did they invade? Was this a land of desert? Was this a arid land? Was there nothing here? No. People get attracted because of the beauty, because of the abundance, because of the richness of the culture and the riches. So that has always been the case, and that's happening even now. We are not going out and attacking anyone. In fact, we are the ones who are telling that stop those wars. We are telling China stop that expansionist mode. We are telling Russia, Ukraine, stop it. We are telling Gaza, Israel, Palestine, stop it. There's no need for war. Vasudhaiva Kutumbakam is what we follow. And here, but then it's like, to an extent, I mean, Atal Bihari Vajpayee had said that okay, we can be peaceful, but if you challenge us, we will show you to what extent we can go to retain that peace. So we can do surgical strikes. We can, I mean, you can see how many people are being killed. India's neighbors, India's enemies are being killed by unknown gunmen. You don't know what happened, but people are getting targeted. So so we need to be very clear about this, that our economy is on a very strong footing. Whether it's public finances, of course there are challenges and they will be there, but we are in a fine fettle. And the moment global economy picks up, our economy also will be accelerating. So we just have to keep a track, and we have to keep moving. So let's be very clear about it. Now, this chart in front of you, this is a monthly chart of Indian bonds, and it's an intimidating one. But there's something I have to remind, and that is this yellow line, which is the Indian bond yield. It is the 10-year Indian bond yield. If you see, and understanding the impact of bond yield differential on equities, it was an editor's pick also. You may go back to this one also. But what I'm saying is that whenever yields have topped, whenever bond yields top and they start coming down, the equity markets generally sees a correction. It happened in 2000 to 2003. It happened in 2008. Yields topped, and after that, the market tanked. This is the purple line. This line, you can see this. This is the Nifty. The purple line is topped. Here, the market stayed flat for almost 3 years after the Ketan Parekh scam. So whenever the yields have topped, equity markets have tanked. Look at this, 2013. Yields have topped and they start coming down, and equity markets start coming down. So over the past 2.5 decades, starting from 2000 till 2024, 25, so we have got like 24, 25 years of data with us. Every time the yields top and they start coming down, the equity markets, they undergo a big correction, if you will. And why does this happen is because uh, yields have topped, yields are increased, or interest rates are increased by global central banks to keep the inflation under control. And when you are keeping inflation under control, it also ends up depressing the demand, or strangulating the economy, if you will, in some way. So what happened is, when the yields are at their highest, when the interest rates are at their highest, that means the impact of that high interest rates will remain in the economy for so long it has been, and even now it will. So tomorrow, if RBI or central banks, if they reduce rates, that doesn't mean that the next week onwards economy will start moving at a faster pace. It will take its time, 3 quarters, 4 quarters, to uh, 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 percolate in the economy. So whenever yields top, that is usually the indication that, okay, the economy is either getting into a slowdown, or it has been into a slowdown and a recession kind of a thing. And therefore, and now for RBI or the central bank, the concern is not high inflation, the concern is low growth. And whenever the concern is low growth, it means company sales are not happening, companies profits are not increasing, there will be job losses, all those kind of negative things. And because of that, RBI or central banks will start cutting rates. So once the rates are fully down, that's the time when the company sales will again, because we will not want to take a housing loan or a credit card loan, housing loan or a personal loan or a car loan or whatever, if we don't have jobs, or if interest rates are high. So interest rates topping out usually means that the economy will be slowing down for, depends upon 2 quarters, 3 quarters, 1 year, 2 years. Like from 2000 till 2003, it was 3 years. But in 2008, it was 1 year. In 2008, the rates came down, and in 2009, the economy was doing fine. So it depends on global cycles. But the point here is that we are at a situation where globally interest rates are kind of tipping, and because of that, there is a very real chance of Indian markets also getting cracked. And we saw that when Japan said that they will be hiking interest rates, and the yen carry trade got called off. So there can be one real danger of Indian markets tanking. And let me now, if you see, this is a wonderful year to date chart. Now, if you look at, I'll just in magnify this. Now, this yellow line and black line, if you see, at the beginning of the year, our yields were something like 7.17%. And today, if you see, our yields are 6.85%. So can you see there is this gradient, there is this slight fall which is happening in the yields. So Indian bond yields are steadily coming down over the last 1 year, which means there is no problem of inflation in our country, otherwise yields wouldn't come down. The rupee has been kind of flat. I'll show you how the rupee has performed, because if you see this, I had said that all factors seems to be falling in place, and that will likely translate into huge gains for currency, bonds, and equities. So equities, we have all seen. Equities, we all know that by the beginning of 24, Nifty was at 21,734, and today it is, even after the correction, it is 24. So from 21 to 24, equities have gone up, bond yields have come down. So that means bonds have rallied oblique stayed flat. And look at the currency now. This is, this line USD INR is just 1% up for the year. The rupee dollar, the rupee dollar pair is just 1% up against the year, and we are comparing it with what? Turkish lira. Okay, no point in comparing Turkey also. Brazilian real 12%, Mexican peso 10% depreciated, Korean won close to 5% depreciated, Thai baht 2.5% depreciated, Chinese renminbi flat, and South African rand appreciated by 2.5%. So if you see for the past one, I mean for 2024, rupee has been kind of flat at 1% depreciation. So across all the benchmarks or the parameters which one would look at, Indian economy has been doing fine. The inflation is under control. The GDP is rising at a steady pace against the backdrop of a weak global economy. Our forex reserves are now, maybe in a couple of years max, they should be touching $1 trillion if things go the way they are. The rupee, if you see over the last few days, has been stable to appreciating. So, be prepared for a big fall in the equity markets if the global markets correct. Again, there's no problem with Indian equities. I mean, our markets can fall if global markets fall, because that's the need of, that's the mandate of global investors. That's one part. But if our markets are targeted, that won't be taken lying down by the Indian investor. So this is the one point we need to be aware. And if the market's correct, then that's the time the local retail Indian investor should go all in and buy as much as good quality delivery stocks for long term portfolio, or maybe if you are into mutual funds or ETFs or whatever. But the point is, in the short term, over the next maybe 1 year, let's say, depending upon how rate cuts happen, how aggressively that happen, what happens to the two wars going on, what happens to the Japanese idea of raising interest rates, a lot of, but these are all global known unknowns. There's nothing in India that's going to trigger a fall in the Indian markets. So be prepared for a big fall if any of these factors play out, and therefore be hedged with your put longs, and keep buying, because you never know for how long the rally will continue, till what level the rally will continue. No one can time the market can remain irrational longer than you and I can remain solvent. So if there is a fall, go all in, keep buying by way of your SIPs or algos. I have an algo, and I keep buying whenever the markets, I mean, whenever the low is below previous low and average. I have one algo script which I have made public. So, and thanks to TradingView for that, because my entire buying is now become automatic, and even selling for that matter. But the long terms, I'm not usually buying for selling, so I'm just holding it. So when markets fall, if because of this global setup, uh, take advantage of that, because the global investors, sooner rather than later, they have to come to India. If our 75 years have been glorious, 78 years, the next 25 years, India at 2047 will be a global leader. We saw that during COVID, and that's what India is. So thank you all of you for all the love on TradingView, and wish you a very happy and a proud Independence Day. Namaskar.